I call him the numbers guy. Larry Walsh from 2112 Group. Larry, how you doing, bud?
Hey, George, what's going on, brother?
Just like you said, living the dream, trying to survive and thrive.
That's everybody.
But
Squirrels trying to get nuts.
exactly. But like you said right before we got on, the answer to all questions is the number 42.
Number 42, which is, yeah, okay, so people know what we're talking about. Hitchhiker's Guide to the Galaxy. The ultimate answer, answer to the ultimate question is 42, which in ASCII code is an asterisk.
There you go.
So,
There you go.
another piece of useless information that I've been able to share with everybody.
You know that's going to be a Jeopardy question if it hasn't
It
already.
should be.
So, Larry, where are you based out of?
Long Island, New York.
Okay, and Long Island has been one of these places that's been hit fairly hard, I would say, or at
I,
least in the beginning.
yeah, it was, I suppose. I mean, I'm in a bubble. I'm under glass, and I just look outside and I see things, and I hear things. I will tell you though, that a lot of businesses are hard hit. A lot of families are hard hit. It's universal. I don't think that any of us can say that we've been untouched by COVID or the ramifications of the pandemic.
I agree with that. I don't disagree at all.
Yeah.
So let's zoom out for a second. Coming out of 2019, I filed some, your work online. You work with well, let's zoom out for a second. What does
Sure.
2112 Group do for people who have never heard of it?
Uh, that's actually people say that to me all the time. What the hell does Larry do to make money? And my answer is a lot. So we are a channel research and consulting firm. We do strategy work for technology vendors. We help them track the market. We help them to diagnose their channel performance problems. We provide enablement services to help vendors, distributors, and partners perform better. We are the source of contextual, what I say is contextual information. The world is awash in data. What it needs is intelligence, and intelligence that is relevant to individual companies and individual managers. And 2112 is the company that the technology vendors turn to get the answers that they need relative to what is specific to their needs.
Fair enough. Okay. And so for the people who have never met Larry Walsh, can you give us a quick trip down memory lane and how did you start off and how did you get to where you're at today?
That's really that's a it's funny you should ask that. I was trying to count off in my head because somebody was asking me about this, and I was like, okay, my first job, I was 13 years old working on a lobster boat, and
Wow.
yeah, I mean, and it still was like one of my favorite jobs. It was like going, oh my God, I'm out in the water, and I'm working hard, I get free lobsters at the end of the day. Um, and somehow that led into a couple of other like high school mediocre jobs. End up in the army for a few years, get out of the army, go to school, and somehow I became a journalist. So I was a newspaper reporter for 10 years,
Oh,
bounced around
what newspaper?
My first job was at the Boston Globe, and I bounced around a bunch of other newspapers for a few years. And yeah, I was everything from a beat reporter to city hall reporter to I did politics, I did education, I did a bunch of stuff over the course of my career. I was the editor of a couple of papers for a short time. And then I went into magazines as the editor of a magazine called Information Security. So I started off my tech career in the security world, and that was a blast. And then I got recruited into this thing called the Channel they recruited me to become the editor of a magazine called VAR Business. And VAR Business, which people probably don't remember, it's been gone now for almost, oof, God, it's been gone now for 13 years. But it was a sister publication to CRN. And
Okay.
yeah, and then when I left there, I went on to do channels for Ziff Davis and was the publisher of Channel Insider for a while. And At that point, I kind of ran out of places to work. And that's why I started 2112 10 years ago. Actually, George, our 10th anniversary is on Saturday. So, and yeah, I started 10 years ago and never looked back.
Wow.
Yeah.
I mean, who would have thought you started something and 10 years in, I mean, you're one of the preeminent voices in the space when it comes to how things are doing, where things are going. I had no idea about the long history in the newspaper business.
Yeah.
Um,
Yeah.
I mean, listen, Boston Globe, I mean, a recognizable name, and I'm sure that you to do all sorts of research while you're on your feet, right? I mean, I would think that the industry's changed a little bit since then, but we all see what it is today. It's a little bit
Yeah.
sensational.
Such as it is. I mean, it's frustrating to me. I mean, so me, myself, and the guy who runs research for me, Chris Gonzalez, he's the my SVP of research. He's also ex-army. He and I both had the same job in the army, except his was in Korea and I was in Germany. And we both went into newspapers after we got out of the military. And we sit here and we lament this all the time: is that the newspaper report, general news reporting, ain't what it used to be.
I agree.
Yeah, yeah,
I
that's
agree.
unfortunate. Yeah.
I think it's again, not to get super political, but a bit more opinionated and a little bit less news for whatever reason. But
Well,
I get
look, yeah, I mean, think about it like this. We got some people listening to us. People will, if we don't say something that is going to make, look, it's going to make, you have to make people laugh. You have to turn them on, or you have to infuriate them. And
fair.
really, and that's why, because there's no, so, um, I'll share this. I can't get into specifics. I can't violate confidences, but I was working with one of my clients and they were doing an announcement and they were asking me, well, what do we need to do to prep for the press? And I said, nothing. I, you know, what? And they're like, why? What if they ask this? What if they ask this? I'm like, they're not going to. And they go, what would make you say that? I said, it's easy. They don't get rewarded for asking you hard questions. So
Hmm.
if you look at the articles that come out in Channel Trade, there's a reason why they're written the way they are. If there is a critical article, more times than not, it's because the vendor is of no threat to them.
Hmm.
So, it's like, they say, oh, somebody's upset. Okay, that's already, everybody already knows. If they say, oh, vendor X is upset about, partners are upset about vendor X, everybody already knows it. Nobody really, they already have that under control. Or the other side of that story is that not the right partners care. They don't care about those partners because they're not the right partners for them. All right, so go ahead. They're buying through distribution, no big deal. But yeah, there's no reward for being critical. There's no reward for giving, for asking hard questions. And so that's why you see a lot of softballs.
I mean, I feel like people don't pay for softballs though, Larry. I mean, what's the point if they're not going to get the real questions answered? That's my. I mean, I don't know. It
I
just
mean,
seems
look, you guys, like, I will say this, partners will ask good questions. When they come to you or they go to their other vendors and they're saying, well, look, what about this and what about that? Well, that's because it's a sales transaction. The vendors at that point are trying to sell the partners on being in the program and then having to sell them on leading with product and pushing it aggressively in order to make their number. The partners, on the other hand, are negotiating for terms. And so it's a completely different dynamic. The partners are in a much better position to ask hard questions.
fair. Fair. I agree with that.
Yeah.
So the types of people that would come to you at 2112 Group to hire you for research, expertise, forecasting trends, that kind of
Yeah.
stuff would primarily be vendors, right?
Oh yeah. Yeah. No, we work well. I I I try not to make a big deal about this because we do work with partners. But
Okay.
typically it's because a partner or a distributor has hired us to do so. And
Okay.
and it's because a lot of times the partners in that equation couldn't handle us alone. So we come in and
Okay.
we'll help them with certain things. We'll provide them with coaching. We'll provide them with intelligence that that a vendor or distributor commissioned us to provide them. We build tools that help the partners understand themselves better. Um,
Okay.
and then the guidance to go on behind it. But it's mostly because the type of work that we do is complex.
Okay. Fair enough. I
Yeah.
appreciate that. So, could you give us an example of something that you've done recently, whether you were commissioned by a vendor or whether it was just general, you doing the work that you do to help your clientele? What would the types of things that you would research be, for example?
Uh, Actually, so well, first, I'll say this. There's three kinds of work that we do. Oftentimes, one is we'll do our own research that we publish to the world. And sometimes
Okay.
that's free, and sometimes that's behind a paywall. It depends on the type of research we're doing, but it's 2112 branded only. Then there's commissioned research, and you'll see that in a lot of places. And then there's our best work you'll never know about because it never sees the light of day. And that's the stuff I can never talk about. I can tell you, they give you blind examples of what they would be, but
Sure.
when you're,
Just give
yeah,
us an example just for
like
curiosity.
like you get a partner satisfaction study, and it says, hi, we want to know what you think about vendor X. It's probably us. Um,
Okay.
at the beginning of the pandemic, we launched the program to where we started doing research about how it was impacting the industry from both a vendor and a partner perspective. All of that research was commissioned by ourselves. We paid for it on our own, and we made it available to the world for free because we knew that everybody needed guidance on what was happening and what to do about it, and we did all that. That was our contribution back to the community. Every year we do our every January we publish our channel forecast report, which is what partners say they're going to do for the year. We also have a vendor outlook report, the channel chief outlook report, which is the vendor version of the same thing as the forecast for the year. And I have to say, one of the things that we are noticing is that the trend lines are pointing back to pre-pandemic levels. So we almost threw away all of our research from the beginning of the year because COVID kind of threw out all of our baselines and our assumptions. But we continue to see steady optimism. And the last number, we're going back out in the field here soon, but the last number we had on this, 55% or so of the channel, both on the vendor side and on the partner side, said that they were either going to equal or exceed their original 2020 number.
Wow.
Yeah,
That's
yeah,
fantastic stat.
yeah. But yeah, you'll see stuff like that. We do. Anybody's working with Ingram Micro and they've seen a tool called Cloud Altimeter, that's us. There's another tool at SolarWinds has one of our tools called MSP Pulse, which is a self-assessment tool for MSPs, obviously. But we do all kinds of, there's a lot of things that float around the market that are done by us that a lot of it isn't even, people can't connect to us because, it's a lot of it is because we stand behind the vendor brands. Our job is to make them look good, not make us look good.
Understand. So now, I mean, I wanted to get all that in the context so people understood how you get to the information that's being generated, right?
Oh,
So
I just make it up.
no, you don't make it up. And if that's the case, we make anything up. And anyway, so so 2019, I gotta think that your research, even you said it sounds like you do like an annual thing. I don't know if that's in January, December, or when
Yeah,
that hits. But
yeah.
I'm curious to see. I gotta assume 2019 was great.
2019 was a really good year for everyone. I mean, there were some weak spots. There's some underperformers which still mystify us from a technology segmentation. Yeah, I don't think that 2019 went into the books in a fairly strong fashion. And here was the funny thing, George. Back in September last year, this time last year, actually, going into August through September, um, the trend lines were pointing towards a recession in 2020. And
Okay.
mind you,
This
it
is
was
pre-COVID.
pre-COVID, yeah. And
Okay.
there was a 4 in 10 chance that we were going to be in. Some forecasts had a 4 in 10, others had 6 in 10, but it was a pretty strong indicator that the economy was slowing down. The thing that was an agreement about it, though, is that most of the economists, because we talk with economists and forecasters outside, about general economic terms, because we just want to know what's happening in the macro world. And what they were saying is that even if we had a recession, they were predicting it would be, and this bothers me when they would say this, it would be between +1 and -2, meaning the growth would slow to 1% or it would contract to no more than 2%. Now, definition of recession is 2 consecutive quarters of negative growth. So if it was at +1, we were just going to be getting a sniffle and it wasn't going to amount to anything. But regardless, by the time we got to December, that was all gone. Nobody was talking recession. When we were in January, nobody was talking recession. But then we started seeing COVID going on in China. And
Hmm.
I'll never forget, I was in Scottsdale, Arizona. It was one of it actually was. It was the last event I went to ever. And I'm sitting there. We were at a dinner with a bunch of channel chiefs, and I'm sitting next to this woman. I won't name the company. And we were talking. She's talking about, oh, the economy is so strong. And I said, yeah, but it's going to fall apart. And she goes, why would you say that? And I said, well, just look what's happening in China. China's taking a bullet for us. And by locking down Wuhan and doing what they were doing at that, and now we didn't know it was too late at that point, but we knew it was going to spread. And even if the pandemic or the virus was contained there, um, the ripple effects out of China, the manufacturing floor of the world today, was going to ripple out in our supply chain, and we did see that happen anyways. And I said China was melting, and they're like, "Oh no, that's not going to be a thing." And here we are today. And all of our assumptions were thrown out the window at that point. But our early indications were is that we were going to survive. That the technology industry and the channel were going to be okay, with the caveat, and the caveat was that um, is that if you're in cloud, if you're off-prem, you're going to be fine. If you're
Okay.
on-prem, you're going to feel a lot of pain, but you're still going to have opportunities. Um, and the interesting thing from an MSP perspective is that lots of demand and lots of pain. Surprisingly, MSPs were the one caught in the middle.
Yeah. Yeah. The sandwich, right?
Yeah, pretty
Between
much.
the
Yeah,
street and the manufacturer, right?
yeah.
So, 2019 thoughts for a second. Tariffs, did they move the needle up or down or
Not that I
no
could
change?
see. No, not that I could see. I mean, look, remember who pays for tariffs? We do.
Oh, they're done. But they pass it down in cost somewhere, right? It doesn't
Well,
just
yeah, they pass
disappear.
it down to what? They pass it down first. They pass it down to the resellers, and they'll pass it down. Well, they pass it down to the wholesalers, to the resellers, to the customer. Now, one of the things that did happen as a result of tariffs is you started to see this was happening in late 2019. Is there was a beginning of the trend for repatriating manufacturing. So you
Right.
were starting to see companies pull out of China and push into other markets for manufacturing. Vietnam has gained tremendously. Vietnam, Philippines, Mexico have done very well in terms of capturing this business. And in fact, nearshoring manufacturing. So Mexico would import parts or components from China, assemble in Mexico, push up over the border, right? So that's one of the
What
other
about
things.
Canada with the new USMCA? I think Canada, Mexico, US, right, are all
Yeah,
part of that.
they closed. That was one of the things they were trying to close loopholes on. So one of the things that COVID did for us, though, is that it started to accelerate the repatriation. And
Okay.
we're beginning to see that happen. And it's a combination of a recognition that we surrendered too much of our manufacturing capabilities off seas. Um,
Hmm.
but again, not to deal with technology, somewhat. I find it amusing. Uh, the United States, I've seen reports, and I can't verify that this is true, so go with it. Um, the United States doesn't manufacture antibiotics. Our antibiotics are manufactured overseas. and then shipped back in.
I think we learned that as a lesson for sure.
Right. And Kodak, I was like going, wait, they still exist? Kodak is now getting into the business of manufacturing the raw materials for pharmaceuticals. So
Hmm.
again, because they're recognizing that there's a domestic need, and that domestic need is going to, they're going to, so I think the repatriation thing is a real thing.
Yeah, that's interesting. So we're not just talking about Apple and Microsoft and all these companies moving their offices back from Ireland and all these other places. We're
Oh,
talking about
they're not going to move back from Ireland. My God, that's too much of a tax haven.
no, I mean at some point the tax bill's got to come, right? All right. So what did COVID do to like you said about 10 minutes ago that everybody for a second got like held their breath, right? For those 2 or 3 months right after COVID hit. But now you're saying that everybody's 2020 forecasting is going to be more or less on par or maybe even better. Like, how did that happen? From as we always say, right? The 20-25% at the bottom of the channel are the people that aren't even doing great when, the economy's fantastic, right? So,
Yeah. So, and that's truly the case too. Remember, I said, the numbers vary depending on where we were, but they range between 58 and 53, either being unchanged or positive. So that's good. All right. Because the 2020 number was expecting a channel growth in double digits. So if you're equal to that number, then you're still growing double digits. All right. The problem is that the other 45% or so on the other side of that equation are looking at shrink. And so that's a significant number. And the numbers would go as high as plus 20, the 20% loss relative to 2019. Things that we did see that were absolutely astounding to us: 30% of the channel at the beginning of the pandemic had less than 2 months of cash on hand.
mm-hmm.
Now, the other, there was a 14% that had no idea, which was kind of scary. But the balance had 3 to 6 months of cash on hand. Best practice is 3 months. The problem was for MSPs, when I said the MSPs were the ones that got caught, is that we were hearing reports from the vendors, from the managed services vendors, the PSA guys, that they were seeing tickets surge as much as 60%. So you think about that, is that there was a huge demand for MSPs to support companies as they are crashing into social distancing and work from home.
Okay.
And
here's a wrinkle question to that point.
yeah,
Keith asked, the shrinkage on the 40-ish% of people who are losing or going to lose, is that because just straight up lost business? People just either shrunk their contracts or went out of business? Or is that because more stable MSPs who are already positioned properly are just usurping their business? Like, what is it? I'm sure it's a combination, right? I don't know if it was.
Yeah, no, it wasn't. There wasn't a whole lot of share shift going on early on. If there was, it was out of necessity. It wasn't like they were forklifting up a new provider. They would pick up a new provider that had a capability that their original one couldn't handle. And now that's why you're hearing a lot of chatter about co-managed services. So what was actually happening though is you did have businesses that were shutting down that impacted MSPs. You did have businesses that slowed their payments or tried to renegotiate their contracts. But what the real impact was is that the surge in demand would cause the MSPs to go above their service capacity without additional compensation, which put a stress on their cash reserves.
Yep, I got it.
Yeah.
So now that listen, I don't know how, we don't know when the vaccine is going to be available. We don't know how long it's going to take for that to be widely distributable. So we don't really know what the tail end is. I assume it's 2021. But now that we're past the initial hit, right, and everybody's kind of in this plateau, where at least figured out how to get by, are you seeing, where are you seeing the room for opportunity, and where are you seeing where MSPs are just getting crushed? Like, I know that's two sides of the spectrum, but are businesses below 10 users just saying, I'm out, I can't do this? Like, where do you see the upper and the lower side of this?
That's a difficult question to answer. There was a surprising surge in demand for cloud services, for endpoints, for security, going through the pandemic. Because everybody was trying to shift to off-prem as fast as they could. How sustainable is that going to be? Well, look, the companies that set up toll booths, they're going to do just fine. Don't worry about Microsoft. Don't worry about AWS. They're okay. It's the real question is that will the smaller businesses, you're saying 10 users or below, 50 users or below, will they be able to invest in the things that are going to be able to sustain their businesses long term under these circumstances? And that is the unanswered question. You have restaurants that are shifting, that are adopting digital point of sale systems. They're doing online ordering to do curbside pickup and curbside delivery. You have manufacturers that have changed their entire sales processes so that they're able to go from direct to factory ordering and be able to manufacture to deliver to drop ship. There's a whole shift in this. The problem is that we're still not quite sure what sustained processes or systems are needed to help to keep us going under these circumstances. And we don't know how long. How much are we going to invest? Take this for instance, and this is what holds up a lot of businesses. We go into this and we say, you know what, I'm going to change everything. And then in 6 months, we're back to normal, or what would be relative to normal to this, right? Is that, we're back in the office. We don't have to be 6 feet apart. We don't have to wear a mask. What do I do with all these other investments? So now what we really think we should be doing is talking about a 24-month horizon. Just assume that this is going to be the way things are. We are learning, a lot of businesses have learned how to reset themselves digitally, that they can work with distributed staff. And so they are making investments that are going to take them over a 24-month horizon. That's what we're recommending. It's not a matter, don't stop, and this is why, if you're going to make these changes, don't think about these as changes as, to get through the pandemic. Think about changes that you're going to make permanently. And that's going to carry, and that will help reduce the risk, because a lot of customers have risk. The story there was kind of untold. Credit and financing, billions was put into the channel in credit and financing to stimulate activity, to make it so that customers could keep buying. Underutilized. And the reason,
who's putting out that money? Is it distribution? Where is it coming from?
Yeah, I mean, I'm trying to think how much money Ingram put out. Ingram put out at least $100 million. Dell put $9 billion. Cisco put $2.5 billion. HPE put $2 billion out into the channel. Microsoft, I'm not sure if they published a number, but they did extend their credit terms. So banks and financial lenders that are underwriting a lot of these programs were extending their credit lines in their payment terms. It really didn't matter, because what these were doing was asking partners and their customers to take on debt. Debt is risk. Well, okay, you're telling me I don't have to start paying until January. Okay, what if the business hasn't come back by then? If I'm if I own a couple of restaurants and I borrow $250,000 to do whatever these tech upgrades are, I still have $250,000 in debt and no revenue. Or I still have to operate under these conditions. So my potential revenue is a third of what it was under pre-pandemic circumstances. So how do I accept that? And that's part of the reason why the financing didn't really work that well.
Interesting. That's a good point. I did see a couple of distributors say that they bumped out their net 30 to net 120, or they kind of expanded the terms situation. Yeah. But let me ask this then: from a supply chain standpoint, is manufacturing, distribution, PC manufacturers, there was a little bit of this from a hardware standpoint, right? I know all the disties are doing cloud. That looks like this to some degree. Yeah, the hardware was kind of flatlining a little bit, even going down. and then all of a sudden COVID hit and you couldn't even buy a webcam. So has that changed? Has this accelerated that side of things?
Supply chains are still hugely disrupted. Um,
Okay.
Accessories are hard to come by. Custom PCs are hard to come by because of component shortages. Um, at the beginning of the pandemic, this was an interesting. Uh, I'll never forget this. This was back in, I want to say, late March, and I was at my local Target one morning. It was like 7 a.m. and it's back when we were all hoarding toilet paper and canned goods. And I'm going through there because I'm like going, you know what? I want to make sure I just have a few of my comforts and necessities. And I see this woman, pushing a cart at 7 in the morning in a Target with two Chromebooks in it. And that told me everything I needed to know. She's now working from home because her work computer was probably her family computer because that never happens. And now she has and I'm looking at her because now I know she has two kids, and the two kids are home and they can't work on mom's machine. So that's where, Chromebooks, headsets, webcams, speakers, the distributors were telling me those things were melting off the shelf. They were going from bay to bay in some cases. One truck would pull up, they wouldn't even hit the warehouse floor, just go into the next truck. That's how fast things were moving. And it's hard to imagine that, right? Because we all think about things as like, hey, I'll order this, we'll have that drop shipped to you. The truth is that actually was happening, is that you did have a lot of like frenetic activity going on through distribution.
So are things going to largely still be very short stock between now and the end of the year, or are, Keith was saying that, seems like the ports are starting to, come back to a little bit more stabilization on income outcome in terms of containers and shipping and that kind of stuff. Like, I know there's a longer delay on like new computer orders, stuff like that, but do you see that normalizing at any point, or are we talking about next year?
It'll normalize eventually. I mean, there's anybody with a hardware right now, though, is going to probably face some disruption still. The situation at Intel it's not even a logistics issue now. It's a manufacturing capacity issue. Intel is now engaging contract fabs to be able to, to produce the number of chips that they need. So that should tell you something. The fact that AMD is doing better than Intel, and we're now looking at, not that AMD is a bad company, it's a fine company, but it was always and AMD. And the truth is that AMD has done a fabulous job. NVIDIA has done a fabulous job. The other semiconductor manufacturers are stepping into the breach. But it's the Intel situation that's really driving a lot of this component shortages, plus the manufacturing disruptions in China. The Chinese, even though China is open for business, it is a far different situation than it was pre-pandemic. They are doing the same things that we're talking about, is that they're socially distanced, they're doing off shifts, they have a passport system. So you have to have an app on your phone, and you have to show that you've tested negative, and so that's allows you to move around. So it's a far different, it's still the source of things in China. And that's where a lot of the disruptions will come from.
We largely don't know what's real coming out of China, other than if it's on the ship or not, right? But
yeah.
Sometimes the news is a bit distorted. So Keith's up a good article that I actually read myself. So he said he read a Wall Street Journal article saying that employers are becoming less happy with the production coming from work or home, working at home. So they were citing slipping project deadlines, lack of collaboration, customer service declines. So if the trend continues, will we have another hurdle with schools closing, supporting multiple workers that are now working from home? So his question then after that, from the article is, do you see a move to employer-backed education centers supporting homeschooling, or other changes to make back-to-work environments reality?
It's a really good question. I'm going to say that part of the first, the CFOs are having a big say in this, and we've been thrown into probably the largest A/B test that nobody ever wanted to do. And we're showing the CFOs that we can do the work in different circumstances with less expense, which is part of the reason why I say don't expect to ever go back to a big show like CES.
Mm-hmm.
It's not worth it. We've been able to, at the beginning of the pandemic, I had Megan Sullivan from SAP on my podcast, and we were talking about how concerned the vendors were about losing their pipelines.
Mm-hmm.
How are they going to fill their pipelines? How are you going to fill your pipelines if you did not have all these events to go to? And what's the truth is that we've done just, most of us have done just fine. The
Mm-hmm.
CFOs have seen this. Now, here's the swing on it. It's a 40-point swing between on productivity. You have some people that are performing at about 100, around, just call it 120 to 80% swing. Okay. You have some people who are performing above their usual productivity, 120, and you have some people who are performing at below the usual productivity at 80. And even
Mm-hmm.
though that they're not equal cohorts, what's going on though is that the expense versus a loss in productivity are canceling each other out. So that's why the CFOs are saying, hey, work from home isn't so bad. Now, here's the thing. This is what I find interesting about Keith's question. And I've known Keith for a long time. He's always good for a good question. Um, the entire idea about, company supported education, I'm going to take that a step further. A lot of these concerns that people are talking about, we can't sustain this work from home thing, is because their mindset is based on the traditional 5-day, 40-hour work week. Is that you start at a certain time of the day, you end at a certain time of the day, you get paid based on some hourly rate, and then you have your weekends off and your evenings off, etc. What the pandemic will ultimately teach us, I believe, is that the value of an employee is not in the hours that they put into a job, it's in the output of the tasks that they're given. So under under those circumstances, what would that then look like? It would be like, okay, George, you gave me a task. I did that task. Well, I did it in 2 hours. I'm going to take my kids to the park. You can call me. I will, I get my next task. I will get that done. But the value of employment and the value of production will be the output, not the time that goes into it. And some people will do more time and some people will do less time. And we'll be able to, as managers, as planners, we'll be able to take those things into account. How much time did it take you to do this? You can already see how uncomfortable that makes people.
Very uncomfortable.
Oh yeah, no, I mean, look, you hear the horror stories out of the Amazon warehouses. Oh my God, they monitor everything we do. We can't, we get evaluated on how much time it takes us to do this and how much time it takes us to do that. And we have to meet these metrics. Yeah, that's called work. All right. Now they're getting paid on an hourly basis. But what if they got paid on the performance measure? You were able to process, to take an arbitrary number, you were able to process 12 orders an hour. So now you get paid more for that because your productivity was above average or something like that. I mean, that's where we're going to start.
Sounds like an HR conundrum, Larry.
Oh God, yeah, no. There's a whole lot of legal conundrum, and the people who hate all of this the most, though, are politicians. Because the government and the tax code is built around 1940s employment. So if you think about the way 1940s, 1950s, or actually probably closer to 1950s, because the unionization movement back then, everything we do, our tax code, our labor laws are all built around the assumption that we go to work. Why do you think California hates Uber? It's because Uber isn't work, it's a task. And the tax code doesn't know how to deal with that. Then the tax code definitely was not set up, the tax code was set up for some independent contractors, not millions. Yeah.
Well, those millions got a little bit jammed up when the PPP stuff came out, right? Because
Oh
originally
God, yeah,
they
they
weren't.
did. Well, they didn't know what to do with it. I mean, it was ambiguous as hell. My wife is one of those people. She's in solo independent contractor, and she kept looking at me going, "What do I do with this?" And I said, "Don't bother. We're fine. We financially we're fine." So it's like, don't. And that's the other amazing thing is that my 2112, like many businesses, took the government support.
Mhm.
And we did it so we could protect our people. And in hindsight, did we need it? No, we did just fine. But we're following the letter of the law, and my plan is I'm gonna give it back if that's the case. I mean, I don't that's the right thing to do. I had people chastising me. And I was even saying, I don't know if I'm gonna take the money. I don't, we really don't need it. Why wouldn't you take it? It's free. I'm like, it's not free. You're paying for it, I'm paying for it, and my great grandkids are going to pay for it. So
Sure.
stop saying it's free.
I think people, listen, they always think about today and sometimes forget about tomorrow, but until it comes.
Yeah.
So what? So if you were, so a couple of comments came through: manufacturing issues and China paranoia. Thanks, Brent. Brent also says that looks like Poly or Polycom, whichever you call them by, is shifting a lot of their manufacturing from China to Mexico, which
Yep.
falls in line with that earlier
Yeah.
with the Mexico starting to perk up a little bit with the new NAFTA or whatever it
Yeah.
is. Also mentions on the Amazon side, he has a special needs son, works at Amazon. Those with high autism work well in that environment. They're talking about more special needs initiatives. That Amazon's like in the middle of doing all sorts of social programs, right? Because they're becoming their own government to some degree. I feel like.
So evil. So evil them trying to help people.
I know. So the people who your customers have come to you, largely vendors, distributors, manufacturers in the channel. What kind of questions have they been asking you moving forward? Meaning, like, you're saying 24 months, right? You're saying look past 2021. We're talking 2022 now, right?
Yeah.
What kind of questions, are they trying to check off in order to determine how they move forward in terms of their spending dollars, their marketing initiatives with their partners? Like, where are they going? What are they concerned about?
Um, this is a question I don't like answering.
Oh,
Um,
I hit a good one.
yeah, I mean, because it's hard to, it's not universal, and it's certainly not uniform. And you have to bear in mind, I start my day in Europe and I end in Asia. So my first calls in the morning are always in Europe. My last calls are always in Asia. I get a global perspective on a daily basis. So that's why I say
Mm-hmm.
it's not uniform, meaning it's not uniform around the world.
Okay, fair.
Um, there's a lot more automation coming. There's a lot more requirements for partners driven out of the need or expectation of higher levels of customer service and customer experience. Uh,
Mm.
there's a lot,
So on that one, before you continue, we've
yeah,
already seen this in international markets where, like, signing up with a partner with Dell in the US, it's pretty easy. Signing up as a partner with Dell in Australia, and they've practically cut their base in half over the last 24 months. So they're
yeah,
really being picky on who's considered partner worthy, right?
right. And look, and I hate to say this, but I'm also the guy. I've had a years long debate with a channel analyst over the value of the long tail. And
Mm-hmm.
he's a proponent of the long tail. I am the guy who says cut it off. Now, remember, I'm here to service the vendor. I'm an advocate for the vendor's business and outcome. I look at a lot of those underperforming partners, good people, solid businesses, but if they're not performing within the expectations of the program, don't bother.
Mm.
The unfortunate thing for a lot of partners is that automation is already here, and they are not even close to being ready for it, and it's going to hurt. And all the vendors, 30% of the vendors prior to the pandemic, 30% of vendors were developing marketplace strategies, meaning that how they were going to shift sales to either e-commerce platforms or what's called 3P or third-party marketplaces like Amazon.
Bypassing the channel.
No, no, it's not bypassing the channel. They're a channel.
An indirect channel.
Right. So remember, when vendors say they are 100% channel, that's all semantics. So consider this. One of my clients sold a ton of software online, direct. You walked up to their website, you could put your credit card number in. It didn't matter whether you're a consumer, an SMB, or an enterprise. They've probably flagged the enterprise order if you try to order 5,000 licenses, but you could go up and buy as much as you want through their website. And I called them on it once. They said, well, we're 100% channel. I said, no, you sell a ton of stuff through your website. He goes, well, yeah, but it's fulfilled by Digital River. They're a partner.
Okay.
That's what I mean, though. So look, you look at some of the hardware vendors. We're 100% channel. Sure, you are. And when you sell your product to another vendor so that they can load your software on, that counts as channel, whether it gets sold direct from that vendor or not. Microsoft, all the licenses that they sell to HP, Dell, Lenovo, that's channel. To them, that counts towards their 93% channel sales.
That's a little bit gray, but okay.
No, look, it's just like COVID numbers. It's just how you count them.
Okay, fair enough. So the guys who are, the traditional IT service providers, or the born in the cloud managed service providers, or the Microsoft focused or security focused subscription only type guys, sounds like the product bundle is not going to hold for long based on what you're saying.
Yeah. I mean, if I had to place a bet, but that's not bad news.
Okay.
Like, here's the thing: is that we have a model that describes this vividly. We call it the Goldilocks model, and it's when products fall into the channel and out of the channel. So sometimes they're too complex and too big for the channel, so they stay direct. And then sometimes they're too simple and they fall out of the channel because it's just not worth it. And it's that Goldilocks zone in between that where the product and the service is just right. It's not so complex that a partner can't deal with it, but it's still too complex for the customer. Goldilocks, right? The problem is that everything commoditizes. Everything simplifies. That's the nature of technology. And over time, you're going to continue to see more consolidation of technology. The one thing about technology is that today's products becomes tomorrow's products features. So we assimilate, we combine, we do this out of, again, go back to what I said, customer experience, because the customer wants the single pane of glass. They want that level of simplicity, right? So a lot of the services we're talking about or products will commoditize and fall out, not necessarily because they're no longer complex, but there's another factor that's playing into this, is availability. Getting product is no longer a challenge. Identifying products, sourcing products, purchasing products, not a big deal. I mean, hell, and this is the funny thing, is that B2B buyers have adopted their consumer experiences and have the same expectations in their business lives.
Yeah.
All right. 91% of millennials, that's anyone between, basically anyone under 40. So in that 27 to 40 range, that's millennial. Those people are now buyers. All right. 91% of them would prefer to buy online.
Wow.
30%, I'm sorry, 31% will only buy online if it's available. All right. So what I'm saying to you is that yes, a lot of this is going to shift in that direction. And what the pandemic has taught the vendors is that yes, we can do that. Before they're like going, oh, we need to have our guy in there. We need to be at the table. We need the meeting. And all of a sudden here we are in the pandemic and we got people buying stuff online. And there's no human interaction. And so now, why is then what I said, this isn't bad news for the partner. All right. The reason is that probably the partner earns less than 10% margin on hardware sales, less than 15% margin on software sales, less than 20% margin on cloud sales. All right. They earn 30 to 40% on managed services. They earn 50 to 60% on professional services. So if you get out of the product sale business and you focus solely on the management, post-sale management, or the professional services to do project work, you may have a lower top line, but you're going to have a much fatter bottom line. That's what I think is going to happen.
Brent actually made a comment here. He said, well, the one that he just submitted was, if you transmit smell and taste, I swear that was a Family Matters episode, you would go 100% online sales.
Yeah. Yeah. I mean, I'm not going to make that joke. But yeah, I mean, look, there's a lot of things that are going to happen as a result of this. The pandemic did not start this. The pandemic accelerated it.
Mm-hmm.
And I've had conversations with vendors. They already know what the future looks like, but they need time to get there. So if you're looking at some of the programs that are going on, it's all about holding the partners in place until they can get their next assets in place.
Oof.
Not kidding. It's coming.
Well, so I think people need to plan then, because I don't think people, I don't know if that's 2 years out, 5 years out, a year out, but bottom line is, I've heard from a lot of people, and two. Everybody better pivot and be ready to go for 2 years. Then sounds like.
Well, look,
let me.
Go ahead. Go ahead. I can throw numbers at you all day.
No, the last topic that I always squeeze in at the end, because it just seems to be very visible, or at least over the last year or two.
Yeah.
Quick thoughts on now all this VC money's come in. They've gobbled up the big four, from an MSP tool standpoint. Do you feel do you feel like all of that money coming in from the upstairs is going to make things better for the MSP? Or to your point, do these companies realize that they got to go upstream and now they start selling direct?
So the big four, you mean Kaseya, ConnectWise, Datto, and SolarWinds?
Yep. Okay. I mean, obviously other things are going on, but those are the ones that are super obvious.
Yeah. There's already VC money in all of them prior to the big roll-ups.
Okay.
I mean, Kaseya, going back to the Gerald Blackie days, there was always, a lot of discontent because they were selling to MSPs and then they go sell automation into the data center, even though that they were the two types of customers never met in the market. I'm always amused. I do get amused by questions like that about the VCs and the big four. What difference does it make? They're supply to you. They're not your business. You are not, MSPs working with those companies. You're not franchises. You have choices on it, and either they're servicing you well or they're not servicing you well. I will say that I thought the shotgun marriage between ConnectWise and Continuum was probably one of the worst mistakes ever. But both fine companies, and I've worked with both companies. Disclaimer, haven't worked with them for years, but kept touch with both of them. It's not that I think I understand the model, why Thoma Bravo did it. But my opinion is that they were two distinctly different companies. And I thought, in terms of what I was just describing in terms of the future model, that Continuum was in a better position for it. as opposed to ConnectWise. Not to say there's anything wrong with ConnectWise, another fine company. You know, set aside some of the issues that they've been having, but you know, look, people were surprised that Datto, you know, got bought. You know, we're flipped hands on their VCs, and Austin McCord all of a sudden leaves the company. That's the nature of business. That's not anything that we should be wringing our hands over. When I hear MSPs asking about that, my inclination is to say is, okay, how does that actually affect your business?
Mm-hmm.
What are the things that you can do that can make your business better? These are tools. It's like saying that, you know, a carpenter, you know, is going to have some experience disruption because the manufacturer of his hammer changed ownership.
Mm-hmm. Like Craftsman, right?
Yeah,
It used to be
whatever.
over years, and
As you can see, my gears turning. I'm like, do I even know who makes hammers? You know, and honestly, that's the thing I advocate to, whether it's an MSP or a reseller or integrator. Don't look to your vendors for value. Look to your vendors for product. Look to your vendors for the technical support, because they do have that for their product. Look to your vendors for resources, but your value is in what you do, not what they do.
Mm-hmm.
And if I was an MSP, no one would know who my background vendors were.
Okay. That's interesting advice. Some people say put them up front, put them into your services agreement, so it's not your problem when they have an issue. You take the opposite approach where you're like, hey, it's all you, right?
Look, you know, look, when I sell to my customers, I know that I'm the face that they see. And when something goes wrong, who are they? You know, I could pass them off to somebody else. Who are they going to blame for the pass off?
You. Yeah.
Right. It's not, you know, own it. You know, the problem I find with a lot endemic within our industry is that not enough companies, particularly smaller partner organizations, have taken the time to actually define what they are and what their true value is in a way that tells a story that will help their customers understand what they do. The entire notion of saying, I deliver great IT services is wonderful. Mm-hmm. So does the other 100,000 people beside you.
Yeah.
So the difference between many businesses is a good story.
No, that's a fair point. Larry, how do people follow you online, subscribe to your research, figure out when the next, benchmark comes out? Where do they find you?
So a few different things. You can always find me online. Follow me on Twitter. That's where you see most of my industry stuff. Twitter and LinkedIn, you'll see most of my industry stuff. If you follow me on Facebook, you'll get part of my industry stuff, but you'll mostly see me ranting about whatever I'm ranting about. And of course, talking about my favorite fictional character, Tony Francisco. If you go to my website, the2112group.com, you'll find all of our research that's published there. There's a lot of free stuff that's in. No, Keith, I'm not going to insult everyone. If you go to 2112.com, you can find our blog and our podcast, as well as our research. And of course, we publish Channelnomics. And so there's always a ton of stuff going on there.
Awesome. That's a lot of good. I didn't know about Channelnomics. That's good to know as well. Thanks everybody for listening in. I hope you found some of Larry's industry facts, because that's what they are, right? We're talking numbers today. Interesting. Please follow Larry. Please continue to join us on MSP Initiative Tuesdays and Thursdays. See that? I almost thought it said Monday. Tuesdays and Thursdays, 1:00 Eastern. Larry, please keep in touch. We'd love to have you back on a little bit later on in the year and see what's changed.
Excellent, man. Good having you. Thanks, everyone.